rental at a time. It is Tuesday, April 12th. And boy, do we got a lot of stuff to talk about today. Real quick, before we do that, though, let's congratulate folks that are doing the work. Mickey and Jeriel, congratulations. Your card will go out in the mail. And Kashif, congratulations for getting your deal. Folks, yes, we are still sending out cards. Yes, I still want to track the impact of this channel. If one rental at a time, YouTube channel, Instagram, website, YouTube, books, helped you in any way close on your first or next rental property, I want to know about it. I want to send you one of these cards. Please take a selfie and we will keep going. We've already helped the first 500. We are on the way to help the next 500. And I think we're at 563 with Kashif and Mickey and Jeriel. So again, yes, we are still doing this. Yes, I want to hear from you. Thank you, thank you, thank you. Next up, a couple of folks have found the Easter egg that I have hidden on my website. I never talk about it. I have a website, shockingly, onerentalatatime.com. On the courses page, there is a little Easter egg for those of you that go there. And it looks like John, you found the Easter egg. And Bobby, you found the Easter egg. So, by the way, hint, hint, Easter egg. I'm just saying. So anyways, Bobby and John, your Easter egg will go out probably tomorrow, but it'll go out shortly. So as for the daily financial news this Tuesday, we have to start with CPI. It came in hot, hotter than expected, but not quite as hot as I expected. I will break it down for you. First off, expectations from Wall Street or the smart money was 8.4. My expectation was 8.9, and it came in at 8.5. This is the highest reading for CPI since, where is it? It was 1981, December 1981. Shockingly, the reading was definitely anchored on food, energy, and housing. The housing or rent equivalent is still ridiculously understated. So like the last 4 months or so, I have gone back and taken out the bad reading of 5%, and I put in the what I deem very conservative 14%. And so 14 bigger than 5. So the correct reading by my math is 11.5. That is before you correct for any other errors. CPI is over 11%. Also, folks, remember we talked about the misery index. I believe this is something that is going to become very common. It is simply CPI plus unemployment. It now is up to 12.1%. The misery index over double digits, not good. We are talking Jimmy Carter era numbers. Again, if you don't know, the misery index is, again, CPI plus the unemployment rate. Pretty crazy. On top of that, never forget that I brought you a month, maybe 6 weeks ago, an important topic. You have to understand nominal versus real. Let me give you an example. Inside the CPI report, it is highlighted that wage inflation went up. Wage inflation reading was 5.6%. Last month was 5.2. 5.6 is better than 5.2. That is the nominal reading. The real reading of wages is negative. Means that you and I are going backwards. Inflation, CPI, food, energy, rent, higher than our wage increases. Not good. The consumer has always been stretched, right? 64% of us live paycheck to paycheck. Now we are freaking going backwards. Not good. Not good. A couple other numbers I took from the report this morning. Food up 8.8%, gas up 18%, and again, shelter up 5%. Crazy, crazy, crazy. On top of that, we had our first earnings of the week that were interesting. CarMax. The banks start tomorrow. I am nervous, and I'm more on that later. CarMax beat top line. Remember, folks, in accounting or in finance, they talk top and bottom line. Let's break that down just in case you don't know. At CarMax, top line is how many cars they sold times the average revenue, right? It's revenue. It's think gross income. Then there is bottom line. You take gross income or revenue minus everything: expenses, taxes, debt, headcount, facilities, interest payments, whatever it is. And then there is a bottom line number. Basically, we ran a business for 90 days. Did we make any money or lose any money? CarMax disappointed by a lot, by like 30%. CarMax warned. This is the warning that I told you was coming. I'm going to get it right. Consumer confidence is waning. Folks, for the last couple of weeks, I've highlighted that the families that make 100 grand are nervous. They are not buying their second car, their third car. This is not good. So again, very, very interesting stuff. I was asked yesterday about LA County. If you don't recall, go check out yesterday's daily financial news. We talked about Seattle. Seattle has adopted tenant-friendly, landlord anti-friendly. I don't know, whatever the opposite of friendly is. And somebody correctly brought up LA County. LA County still has an eviction moratorium, even though it is unconstitutional by our Supreme Court. LA County says, not even here. I don't know what they're saying, but they still have eviction moratorium. So yes, I believe LA County, because of their punishment of landlords, I believe without question, LA County could see a loss of 30, 40, perhaps even 50,000 affordable housing units. Why would any landlord stay in LA County? The eviction moratorium is out till 2023. Kick the tenants out, remodel the unit, and sell. LA County, you screwed up. You're going to make Seattle's 3,000 loss look like nothing. Crazy, crazy, crazy. So yes, I do think somebody asked what I thought about LA County. Not good. LA County is going to lose units. I would not be shocked if it's 30, 40, or 50,000 units by the end of next year. Why would you do that? Yeah. 30-year mortgage rates over 5.25. I reached out to Matt, the mortgage guy. We talk tomorrow, but I just wanted to know. Yes, owner occ 30-year fixed rate money, 5.25, highest since August 2009. Rates have moved so fast, I do believe the housing market will be frozen in place. We have heard about the great resignation or the great reshuffling. 21% of employees who changed jobs in the last year are looking to do it again. That's amazing. Oh, I'm sorry. 21% of employees have changed jobs. Of those 21%, 40% are looking to change. Almost 1 in 2. Crazy. Shanghai lockdowns getting nuts. I don't know if you guys have seen what's going on in Shanghai, but you thought some of our lockdowns were bad. Man, we're talking lockdowns go to jail if you violate them. Woo! Yeah, I don't know what's going on over there. But 30 million people on lockdown can't be good for the supply chain. Can't be. That's why gas and oil is down, because you got 30 million people going nowhere. It's crazy what is going on over there. Some of the pictures I've seen from family members who are there is wild. Inflation fears hit record high. This is something that concerns the Fed. Record high expectations, right? This is a consumer-driven economy, and the consumer at 67, 68% of GDP has the wherewithal and the means to change it on its head. And again, when you start to see expectations as high as 6.6%, that is a problem. Consumers are changing behavior. I've been reporting on that the last 10 days. That is not good. I can't believe this is true. I hope it is fake news, but apparently the White House, the Biden administration, has not totally given up on Build Back Better. They may not call it that, but yes, they are looking to spend trillions of dollars more in an inflationary environment. We haven't even spent the trillions of dollars from the infrastructure bill. What the heck are we? Have we not learned that inflation is always a monetary phenomenon? Too much money chasing too few goods, and you want to spend another $1 trillion in that environment? Somebody's got to go give an Econ 101 lesson because that's just nuts. I think we talked about this a couple of weeks ago. Warren Buffett dropped $11.6 billion buying Allegory Corp. And interestingly enough, he was able to pull off an $11 billion deal in 2 weeks. Talk about a guy that is committed. That is crazy, crazy. I can't imagine. Can you imagine writing a check for $11 billion? Whew, I think my hand would shake. I think my hand would shake. Of course, you don't write a check, you do a wire, but still, the idea is out there. Wow. Actually, you know what? I love audience participation. Let me know in the comments below, what is the largest check, like physical check, you have ever written? I want to hear about it. Leave comments below. I'm just curious. Anybody write a real big check? Leave comments below. Looks like not only are the car manufacturers warning about waning consumer supply, but now you have global PC shipments saying we have peaked. 2022 is going to be a bad year. I don't know why any of this is news, but folks, we just went through a pandemic where everybody who could bought a computer. You may have been in a household who had one computer. Now you probably have 3. Shocking. Which, oh, by the way, could hurt chip stocks. Sometimes I wonder why we're not putting the bigger picture together. It is crazy. 10-year note last night, 2.81%. I did check this morning. It has dropped a little bit to 2.7, but still very, very crazy. Elon Musk, after dropping and buying 9% of Twitter, has declined to join the board of Twitter. I wonder what is going to happen. Is he going to go speculation? I mean, is he going to go hostile? Does Elon Musk really want Twitter that bad? Or is he just going to flip it for a profit? I don't know. I don't know. I don't really know that he wants to go hostile. Seems like he's got a lot going on already. Right? He's got Tesla. He's got, I don't know, Boring Company and SpaceX. Does he really want, could he really do more? Does Elon Musk have a time stretcher or something? Because he gets more stuff done in a day than should be humanly possible. Pretty crazy. More Fed presidents. Now the Fed president of Chicago, Charles Evans, is saying that we got to get to neutral this year, sometimes between 2.25 and 2.5, and a 50 basis move and a couple of 50 basis moves might be likely. Bank earnings tomorrow. Be careful. I'm nervous. Just so we know and we are clear, generally speaking, in a Fed tightening cycle, meaning Fed raise rates, banks print money normally. I believe rates have moved so fast and so far that we're actually going to have loan destruction. We have banks talking about the interest rate trap. I chose to call it supply destruction. Either way you look at it, less loans are being done. That is a lot of profit. Banks also, last year, were doing lots of trading and lots of deals. I think Q1 is weak. I think banks could really be in trouble starting tomorrow. I forget who reports tomorrow. I think it's JP Morgan and someone. I don't know. We'll see. 2 people report tomorrow, 3 on Thursday. It's going to be cool. Macy's, retail stores. This is interesting. Again, this is all about the consumer, folks. What is the consumer going to do? Macy's is saying that they are afraid that instead of shopping for clothes, in this case, that fearful consumers will take trips and vacations versus buy stuff. Frankly, I hope so. Don't we already have enough stuff and enough Amazon boxes coming to our houses? Let's get out, make some memories. So that's what I got for you, folks. I did just create a video about the 5 books that I recommend. I will upload that shortly. I was asked to write an article about the 5 books that really changed or really helped me on my journey. So I just did a video in my office showing you those 5 books. Look for that video. I'll probably post it in the next half hour or so. I will put links in the description and all that stuff. And yes, folks, those of you that are wondering, I did that entire show with Sonny on my lap. I bet you didn't even know. Yep, Sonny was on my lap the whole time. Hit the thumbs up, comment, say hello, say hi to Sonny. He wants to say hi back. I will do my best to respond to you every day. Take care. Bye-bye.